Hello, everybody. Adam Parks here with another episode of Receivables Podcast. Today, I'm here with some interesting guests and some folks that I guarantee you've seen around the conferences through the years, here to talk with us about payment processing. As debt collectors, collecting payments is the primary objective of our businesses. And for every one of those payments, it has to go through the payment rails before we actually receive that money into our bank account. And I think it's something that the industry has looked at as almost commoditized because of a lack of understanding of the level of complexity that goes into it and the types of options and the differences between the types of companies providing those services to our industry. So today I asked Chris Compton and Anthony Faldetta to join me here and kind of teach me a little bit about the payment rails and what needs to be happening in order to optimize my payment processing. So gentlemen, thank you so much for joining me today. I really appreciate you coming on and sharing your insights.
Thank you very much for having us. Looking forward to this.
Of course. Well, Anthony, starting with you, could you tell everyone a little about yourself and how you got to the seat that you're in today?
Sure, I'd love to. So I started working for the post office about 30 years ago in the mailing side of the business. From there, got recruited by a Wall Street mail merger type of company. So we were fulfilling all of the merger and acquisitions that were happening or IPOs that were happening through the proxy statements. Back then, it was all paper. There was no digital. So we were hand fulfilling all of that. And then met up with my previous employer, who was there for 23 years selling direct mail to this industry specifically. Met a lot of great people, created a lot of great relationships, and through that met Chris Compton. A few years back, I was going through some tumultuous, I'm going to use that word, times with my previous employer, and Chris Compton and I started talking about an opportunity, and we quickly realized that the industry has a need for an honest parent payment processor. So we started the business and we started selling to people, and we were able to scale pretty quickly, and we did a great job in making sure that the clients got what they needed technology-wise, they got what they needed transparency-wise, and we've been servicing close to 110 clients now for a few years, and it's been a great experience, and looking forward to continuing that growth to really help people, because at the end of the day, we're not looking to. Now, I'll give my sales pitch real quick. We're not looking to make a home run off of one client, right? So we could have clients that we've saved over, $8,000 to $10,000 a month. And sometimes the conversation is like, why do we need to save them so much? And the reality becomes is because we want them to stay with us for forever. And that's just the reality. And I used that number. I should have used more of a percentage, but it's been close to 30% savings, up towards 40 or 50 at times, as well as enhancing the technologies that people are currently using, and things like that. So, super excited to be here. Super excited to be in my new skin, let's call it. And it's been a great run, and I'm looking forward to grow this out of the world for me and Chris and our families.
Well, I've been learning a lot about this from you as we've been talking about it over the last couple of years. So, Chris, for anyone who has not been as lucky as me to get to know you a little bit, could you tell everyone a little about yourself and how you got to the seat?
I don't know if there's a little. I'm 53 now, so there's a lot. My path started, in college. I was a swimmer, University of Tennessee, All-America swimmer. Always wanted to be a swim coach, so that was what I kind of wanted to do. So I started a swim team right out of college, first business I ever owned. Did that for a long time and was teaching school at the same time. Went from, always having pruny hands to saying, I want to make some real money. I want to do some things that give me a better opportunity, better family life. I started in sales, started door knocking, B2B sales for AT&T. That opportunity moved me down to South Florida, where I ran all of South Florida of AT&T for the IT sales side of AT&T, where I met my beautiful wife of 18 years now. From that, went through a company that did what I did, that wanted me to kind of do the technology sales for them, that owned payment processors. So it got me into the kind of flow of, hey, they taught me the payment processing side, grew their business for a long time, worked in the payment processing field since like 2008, realized that, like Anthony said, there are opportunities. Anthony and I had very good conversations 10 years ago or 8 years ago or however long it was ago that basically put us into the place we are today, that where we can really help individuals understanding how payment processing works, not take advantage of individuals because they're so-called high risk, which a payment's a payment. We can talk about that at any time during the show. But that's kind of like a nutshell of the 30 plus years. I went from swimming to coaching to Eliteserv now.
Well, hey, look, it sounds like you guys are doing something right over there from everybody that I've been talking to. When you say a payment is just a payment, I like that. Let's dig into that for a minute. What do you mean by that? Because we've always been told that we're high risk, right? We've always been looked down on from a payment processing standpoint. Many of us remember Operation Choke Point and some of the things that we've been through as an industry.
And that's kind of been the irony of everything, right? People like to use the word high risk because they can say, I can charge you more. I get more profit if I charge you more. Let's talk about that, right? So a payment that you call over the phone to make a debt payment, a MOTO, mail order, telephone order kind of payment, is the same payment as you calling a reservation for a hotel. So are you telling me now the hotel industry is high risk? It's not. It's the same. So a payment's a payment, right? The way you take the payment, whether it's in person or if it's not in person, it's the same. The industry dictates whether am I at risk or not risk. If you're doing bad things, you're at risk no matter what your industry is. If you're doing everything compliant wise, you're not a high risk client. And we have many, many banks that'll see that and let us allow you to charge the low fees that you should be getting in the first place.
Yeah, I don't see collection agencies as being high risk from a payment perspective. And you see chargeback rates that are significantly higher in other spaces where the consumer is, let's say, making a decision. But so when we talk about payments, and this is something that's, I think a lot of people are lacking in the space, is an understanding of what happens from the time that the card is swiped or entered or taken over the phone, whatever that entry point is, through the point of the money actually hitting the bank account of the merchant. We've seen all the diagrams, the flashing lights, but can you give us a simplified version of what that process really looks like?
Yeah, so it's there's a lot of variables that go in between that. So a lot of it depends on kind of like who you're using, what gateway you're using, what process you're using, all of those things that we kind of take into consideration. But a simplified version is really six things. You have an authorization, right? So the authorization says, hey, let me authorize this, make sure this bank account is good. Let me make sure that there's funds in the account. Then it's an authentication, right? So once that happens, it says, okay, then I'm gonna authenticate this and let me make sure that I'm holding the funds for that person. I capture that. So I capture those funds so these person can receive the payment that they just took, and the capture makes it ready for release. Once it released, then there's a clearing piece of it that clears the funds, the settlement piece of it that settles it into your account, the notification from your bank that you got it. Basically a simple step process. Now there's a lot of components that go into that, from the customer to the merchant to the payment portal, the gateway, the processor, next day funding, 3-day funding, how much am I holding, who's doing what, when, and whenever. But the process in itself, from the authorization, authentication, capture, releasing, settlement, and notifying you, is the same no matter what payment you're taking, whether it's brick and mortar or e-commerce.
We piggyback on that a little bit as well. So that goes back into these different steps that Chris had mentioned. And as we have these different steps, there's different partners that could be used. And a lot of our vendors, a lot of our competitors, what they do is they kind of, like, I'm going to use the word, a white label all of these other products through these different steps, and they make it theirs. So as opposed to using a processor to do everything under one roof as we do, they have many different, like one gateway, one portal, one integrated. So you have 3 or 4 different partners for one transaction. So when there's an issue with something, they have to make 3 or 4 phone calls, get 3 or 4 resolutions. Some service teams are just constantly, barreling down these teams, and it's causing time, and time in this environment is complete money. So when you have a partner that has all of those systems and integrations in place, it streamlines those processes. So it's very important that you take a look at that to see who's white labeling, who's not white labeling, and who's being transparent with these processes, to make sure that you have your money in the timely fashion, you have your questions answered in the timely fashion, and your customer service is also being handled in a timely fashion, because that's the biggest piece, right? We can all say and partner with 10 different companies, get something done, But when there's an issue, I got to wait a week, 2 weeks for a resolution because it's got to go get bounced around 5 different ways. That's a
On
big
time,
problem.
time is money, right? Especially when we're talking about something that's a mission critical portion of our business. Because if we can't take the payment processing is not functioning correctly, right? Like support is of the essence because my entire operation is at a standstill. Everything from my digital efforts to my folks on the phone, like everything is at a standstill because that is really the lifeblood of their ability to work.
Right. And then tack on some technologies to enhance that, right? By being able to accept other forms of payments, like digital payments, as opposed to the old fashioned just credit card, ACH or debit, right? There's all these different, again, do you want to deal with one provider or do you want to deal with multiple providers, bolting on more customers and more things to manage for you as an agency, or using the processor that has multiple partners waiting for these answers to come across in a very lengthy time as opposed to a short time?
Well, being able to balance that, which I think is interesting. One of the things that a lot of organizations had to do during Operation Chokepoint was they had to run redundancies. They had to have 3 or 4 different vendors running because all of a sudden company X, which was very popular, can't process today. And like now where does that leave us? So what is a good diversification option for these folks, right? Is it in how you're evaluating your payment processing vendor, or is it that you have to have multiple vendors? Like how should we be looking at that as an agency?
Chris, you want that or you want to dig it?
Well, I think we always promote redundancy. That's my IT background, right? So my IT is about that. You want redundant networks, you want redundant security, redundancy. The truth behind it is, like you said, if you're doing it right, you're staying compliant, you're keeping your chargebacks down, you're doing everything, your BBBs are good, and all the things that they look at, you should never really be shut down. There are cases where a bank will say, no more, It's not that it's that old saying that says, one bad apple can ruin the bunch, right? So if a bank has 1,000 agencies, collections agencies, and one agency does something really bad, that bank could say, I'm not going to take it. But that's the beauty kind of what we do is with the 7 or 8 different banks that we have, all linked to us. So the switch is not a hard switch. It's just changing the bank. If that happens, But
then the technology from the customer's perspective doesn't necessarily need to change. So by putting it into the hands of an organization who can make that switch for me,
correct,
it seems like it makes it a little bit easier. The same reason when I'm running the websites for the industry, we run them on 2 different IP addresses. So them to call IT to move something, I can just handle that seamless load balance without additional needs.
The Rails.
That's why that's why they hire us, right? Is so that they don't have to do the things.
100%.
Totally. And the rails of the rails of the communicating with the CRMs, system of records, all these. So none of that changes. Tokenizations doesn't even change. Right? All that it's just a different pointing to a new bank kind of a thing. That's really it. So can you do multiple banks in the background with using the same rails, different rails? Absolutely. So we can accommodate any one of those sides, right? Depending on what comfort level the client requires. But to Chris's point, if you're doing everything right, you don't really need to, right? Because at the end of the day, it's just all systemic and it's automated. But if you feel like you have to appease a client, absolutely. That's a very simple thing to do.
Call me paranoid. 2 is 1 and 1 is none.
Exactly. Yeah, exactly. So we want to cover all bases.
Promote that with everything that we do is, hey, we want to make sure that you're redundant. We want to make sure that you feel comfortable, just like you say on your IP side, just like you say, if you can't get into your data bank because it's sitting at a co-location in Miami, well, guess what? There's one in Miami, there's one in New York, there's one in Texas, and they all ping each other. It's the same thing on the payment side. We're able to manipulate that technology of banks so that if one says, I don't want you, that's okay. We'll move you over to this one. That's okay.
Cycle it through.
Changes. We'll just move you.
Well, that's a nice, simple, easy way for them to do it versus having to deal with an entire day or 2 days of downtime while you're trying to get answers from an application stack that's 5 organizations deep.
Downtime does not exist.
Yeah.
That is the objective, right?
In a perfect world, yeah, exactly.
Yeah. I'm sure you've heard the 5 nines, right? We got the 5 nines. We're going to be up, baby.
Yeah, we operate at a 99.999% rate of effectiveness.
Well, and that's generally for something that's so mission critical, we really don't have any options, right? Like being able to process payments, shut down everything. Like there's nothing that business, a collection agency, can do without that in place. And for a debt buyer, it's slowing their investment repayments. I mean, it brings the entire business to a halt. Now, one of the things that you mentioned there was banks, as we were kind of talking about how you can flex that technology. So we talk about the banks. I know a word that I hear a lot is ISOs. So we've talked a little bit about what the natural process looks like. Can you tell me a little bit about who's involved at each layer of that process that we discussed?
Okay, you can take that, Chris.
So if you're a direct ISO, right? So an ISO is just basically an independent sales organization. So
Okay.
we are an independent sales organization of multiple banks, right? But to become a true ISO, then you're taking on the liability. You're taking on the risk. You're taking on the things that honestly, there might be two out there,
Yeah,
right?
that's like the white labeling piece that we talked about earlier.
Everybody else is kind of white labeling, like Anthony has talked about. So everybody else is kind of reselling a product. Everybody else is kind of utilizing other technologies because you can't own it all. I mean, there's too many out there, right? So the key is on our side is we got me and Anthony, and we have a support staff, but we have hundreds of support staffs through our banking relationships that also sit on our site to help us. So when we call, we don't call 1-800 help me. We call the president of who we're talking to. We make sure that we're supporting you at a level that you're not waiting in line at a queue, right? You're not next in line. Hey, the call's 10 minutes. Can I call you back? I need my money. You need to talk to me now. So that's the kind of support that we're trying to bring in. And so we are basically, and I'll let kind of Anthony tie into this, a direct partner, proprietary partner of many top tier kind of ISOs that allows us to bring a solution that is catered to you versus what I only have to sell. I'm not
Mhm.
stuck to a product. I am kind of processor agnostic and customer focused is what we do.
And we bring the customer to the best solution, right? With obviously we have our main for this space, and that's the where it's a single stop shop. We have our own rails, our own banks, our a pool of banks to pick from, our own processes, and that's where we end up, you know, boarding the collection agencies, most of them, for some absurd reason that something pops up that they don't want them, but that hasn't been the case yet. All of the agencies get boarded here, and they have all of this information. So you're making one phone call. You're not making 6, 7, right? So again, having this proprietary process allows us to service the clients in a very good, timely fashion, which is important because, like I said earlier, you have one gateway that you're using, one bank that you're using, one piece of technology portal, whatever it is that you're using. It may or may not accept digital payments. So you have to add something else. So you might have like 5 or 6 different vendors dealing with one processor, and that processor is going to make those phone calls to try to get that done when they do this white label thing. So we're very transparent about who we are. We're ISOs, right? And but our partners are direct. So we're just making one phone call. So wherever we board you, we're making that one phone call, and that one phone call does the system integrations, has all of the rails, has all the information, and that's what streamlines the processes and makes sure that you get the best technology for the same bang for the buck, if not less. Very key there, because that's a key thing.
And so when we think about the challenges that our industry is facing as it relates to payment processing, what are you hearing as you're talking to organizations in the space that are some of their current pain points that they're struggling with?
Yep. Today's time is everything's about digital payments. They want
Mm.
to, Apple Pay, Google Pay, PayPal, Venmo, you name it. They want to accept, crypto is going to be down the road too, I'm sure at some point, right? So they want to be able to make sure that they can accept these digital payments along with the traditional ACH, debit, credit card, whatever it may be. So today's buzzword is digital payments. Do you have that in place? Are you accepting that? These new generations that are coming up. I mean, I have Apple Pay on my phone. I forgot my wallet the other day. And my girlfriend's like, yeah, why don't you just use your phone? I totally forgot that I could do that. And if I could leave my wallet in my car at home and go shopping and go do something else, everybody's doing the same thing. You know what I mean? So it's going to keep going down that road. So to be able to accept these digital payments is key. Because if I get somebody on the phone, I could just send them the information via that quick. and the payment's done. It's that quick, so you have to be able to be on board with that and make sure that you have the technologies that can board that for you. And your partners need to be able to. Right now, a lot of system of records, unfortunately, have not caught up with the times yet. So there's a lot of companies that are kind of being held hostage by their system of record. So they're waiting for that to get caught up to be able to add these digital payments. I'm sure that in 2026 that they'll make the digression to that. We're ready. So whenever anybody's ready to accept them, we could provide it. Which is
I think it's an important one. I'm curious as we look into the future. Do you think that crypto is going to be here as a payment methodology in the space in the next 5 years, 10 years?
Yeah. I mean, it's
What do you
being
see down the line?
regulated. You see it all day. Today, this morning, I woke up and I saw Solana and another ETF coming out by Morgan Stanley. So it's regulated. It's being sold, and they're talking about Solana compared to Ethereum. Ethereum's slow, where Solana's faster. So that's going to get a big pick. It's going to get a big pickup now. So that's going to start going to get some traction. Bitcoin's kind of drawn out. So I think crypto is going to be in this space. And now you have to have that flexibility to be able to use a bank that could accept crypto and make sure you go down that road. Now, we're not there yet, right? Nobody in the industry is really there yet for that, but I do definitely see it happening in time, right? That's going to come from the CFPB or president even down saying, okay, you guys can now accept this form of payment for a distressed debt, which would be interesting to see if that legislation ever does pass. But I think it's gonna. I think within the next 5 years,
even without legislation, I think within 5 years, we're going to see it either way, because whether or not they clear the way for it, or we're just going to have to figure out how to convert it fast enough.
Agreed.
The exchanges aren't fast enough, and that split second of time differential in the marketplace could mean a penny, and we know how Elizabeth Warren and others are going to feel about that penny.
Exactly. Yeah.
So we got to be on point.
The key factor there is what blockchain do you use, which is going to be the faster one, which is going to be the process this the cleanest, right? Because the faster the transaction happens, that penny differential is not going to be there, right? That's the key.
But what's the consumer holding? This is where I think the crypto conversation starts to get interesting. I'm glad that you brought it up, because I do think it's an interesting discussion that our industry needs to continue to discuss into the future. But even looking at some of these other channels like Venmo, Cash App, everything else that we're starting to see, I mean, I'm down in South America right now, and their little QR code system, similar to the UPI payment system that they use in India, down here is called Pix, and it exceeded credit card transactions this year. So I can walk up to the coconut man, get some coconut water, scan the QR code, make the payment directly from the bank account. Not a huge fan. I prefer the credit card and the protections that are ultimately afforded there, and I think they'll less transparency directly to the government on every receipt and purchase, I think, is also a good thing. But call me a Boston, and I feel like it's probably just
I'm with you on that, though. Yeah.
My American route. But I think it's interesting as to how that flows through. So you've seen a lot of organizations starting to move towards those digital payments and starting to evaluate it. I feel like merchant services for me in 2025 wasn't really looking at that expense line, because it was just one of those things that just kind of existed in my world. And it wasn't until December, as we were kind of going through our corporate restructuring and organizing ourselves, that I went, man, this is something that I really need to look at. So immediately reach out to you guys and start the conversation. But I feel like it's one of those things that in our minds, it's become it works now. We had so many problems a few years ago that it works now. So people are just kind of leaving it there and not touch. Yeah, don't touch it. It might notice that I'm here. I don't want to wake the sleeping bear. And it feels like we've gotten so far past that now as an industry, and in terms of the technology that you're able to deploy, that it's not really that fear factor is gut instinct, but probably not best for us these days, or best for our organizations.
It's definitely not a best practice, right? So in the end, you have to look at it as even in my previous lives. Hey, I'm selling this product. At the end of the day, when you're a business owner, no matter what product that you need to look at, you need to keep your vendors in check, right? So how do you do that? By every few years, even if you want to just prolong it, just check to see what's out there, what's available, what it should be costing you. Can you bring in to streamline a process, give you more efficiencies, less headcount, things like this. So if you're not doing that because you're afraid using that language, because you don't want to get, sleep the walking bear, then you're losing an opportunity to potentially, like I said earlier, save, 30, 40%. Up to even, and that could be a big number. So if you could save 30, 40%, as well as add technologies, streamline processes, now you're ahead that much more. So you really want to I feel that you should always be doing a vendor, checklist kind of thing every year, 2 years, 3 years, whatever the cadence may be. You should go through your processes, see what's happening in the world, see what's available, keep everybody on their toes and working for you. That's the key factor. You want everybody to work for you. And the one thing that I've always done in this industry, and I'm sure everybody that's watching this will say, I'm your unpaid consultant. You want to bounce something off of me? Give me a call. We'll talk about it. I've done it in every instance with portfolio sales, which I know nothing about, with other things I know nothing
But you
about.
know the people involved, and that's the important part.
Exactly. So you put people together and you get stuff done, and that's basically what it happens, right? So give me a call, give us a call, and we'll walk you through whatever it is that we see. These analysis that we do for our customers are at no cost. And again, treat us as your unpaid consultants, and we can sit back and really dig into your process, dig into your invoices, show you what it's currently looking at, and give you what we think it should be at. And then from there, you can make your decisions on, at least beating up your current vendor or switching. That's up to the business owner, but we're always here and available for that. Because again, we're looking at friendships. We're looking at being in the business, being here for 25 years. It's about friendships. It's not about I want to walk through the trade show floor and have everybody shake my hand saying, "Hey, you did a great job. Thanks." Chris doesn't want to get punched in the face by somebody either. So, so we want to come in and you guys do a great job, and they never leave us, and that's the whole key, right? Because leaving could be an arduous process if handled incorrectly. If handled correctly, leaving is not that difficult, right? It's only the only thing that needs to be discussed and during implementation is basically the tokenization of reoccurring payments. So if you're going to go ahead and transfer your reoccurring payments over right away, most of the time the gateways will release those old payments to the new gateway, or we keep the same gateway and we just kind of roll it into the new situation. And it could be as simple as that. Is it always that simple? No. Do phone calls need to happen sometimes? Yes. But we have overcome this in the past to make people aware that, hey, listen, you are not stuck in the situation that you're in because of whatever might have happened 5 years ago, 10 years ago. 3 months, 4 months ago, 6 months ago. That's where we live. We live in a short time. People have short memories. We'll go through it. We'll look at it for you. And then we present that to the banks and they take it. So if they say no, you stay where you are, and but they're never going to say no. That's a fact. So.
Yeah, well, it sounds like a interesting, very easier process than it used to be. Go ahead.
100%. Yeah.
And I'll add to like what he was saying is with the unpaid consultant is I feel like, and not me personally or Anthony personally, like we're not geniuses, but we have a wealth of knowledge with relationships and the things and the partners that we have. We can bring anybody to the table that's going to answer your question. You just got to ask the question. Right? If you're sitting there and you're going, say you're looking at your end of year books, right? And you go, why in the world is it costing me boom for processing? I'm going to call Chris and Anthony. We'll show you why. Whether you do anything about it or not, we'll show you why. And that's kind of what he's talking about is that use us in that forum because, that's kind of what we do. And that's kind of why we help our clients.
Yeah. Compliance
helps you get to the bottom of things pretty quick, right?
Agreed.
Yeah, because we know what to look for where you don't look at it every day. You look at it once a year. You go, well, I don't even know what to look for with it. You know what I mean? We're looking at it on a daily basis. We can dissect it in an hour and be like, man, yeah, this needs to change. Or, no, this is right. This is kind of where you are. And they're doing a good deal or whatever the deal is. We'll go either way and just be honest.
Hey, Adam, I also want to add that compliance is also like a big part of this, right? So when you're dealing with somebody that may not be industry specific or just kind of, around the industry using that language, and then all of a sudden you're hearing a bunch of information around convenience fees and adding fees and doing all these other things. There's a lot of rules that are around that can only happen a certain way that you're allowed to do it. So if you're doing it the wild, wild west way, good luck, because those fines can be upwards as $50,000 per account. So, you want to get a Visa fine and then shut down and get blacklisted, you're doing a great job. Because it's a matter of when they catch you, not if they catch you, and it's using a compliant processor that has all of that information at their fingertips and able to implement a fee model without having to worry about if they're going to come knocking on your door. That's a huge piece as well, right? As well as just being overall SOC 1, SOC 2, and all the other information that goes along with being compliant with security. You want someone that's tied into the CFPB, that's tied into the FTC, that could come in and speak to the rules and regulations because they live and breathe it. And that's who we bring to the table. You know what I mean? And that's a huge part of it, because we've had some very interesting conversations in the last 6 months of, well, they're doing it this way, why don't you? I'm sorry, it's not going to work that way. You have to use the processor to accept the payment. You can't accept the payment, and you can't blend the convenience fee to cover other costs. It's just specific for that. Like, a lot of rules that are around that we can get into at a later time or today. It doesn't matter, but that's a huge piece of where the industry is also kind of dabbling in. Clients are starting to loosen their belts with that. So it's a conversation piece, but not fully there yet with the banking side of things, or even telco. It's basically in the telco world and some other worlds, some other verticals.
I think convenience fees themselves deserve their own episode. Like, that's something that I think we need to dig into and really have a deep conversation about, because there's so many different varying factors to it. And then what are the actual rules around it? How is it being implemented through the technology platforms? And for those that are watching here today as well, you guys are going to be at the RMAI conference here in just a couple of weeks.
Yes,
Absolutely.
sir. Feel free to tap us in, reach. I'm going to be walking, not exhibiting. Chris will be there as well, so we'll be there together. So if you have any questions, you want to have a quick little meeting or a cup of coffee or dinner or lunch, we'll be more than available to you to help answer any questions you have. And again, being your consultant at no cost. So if you need an introduction to somebody else about something else too, Chugs, I might be able to help you.
Give Anthony a call.
I can help you there as well.
That's true. It's true. Many times you've done that for me. I really appreciate it. Gentlemen, I appreciate you coming on and sharing your insights today. This has been a great conversation. It helped me to understand a little bit more about what this process actually looks like behind the scenes and who some of the players are that fit into it. But I really appreciate you guys sharing your insights.
It's awesome. Thank you for having us again, Adam. I look forward to the continued relationship as well. It's going to be great.
We're going to have a lot of fun together. For those of you that are watching, if you have additional questions you'd like to ask Anthony or Chris, you can leave those in the comments on LinkedIn and YouTube, and we'll be responding to those. Or if you have additional topics you'd like to see us discuss, like convenience fees, you can leave those in the comments below as well. And hopefully I can get these gentlemen back at least one more time to help me continue to create great content for a great industry. But until next time, gentlemen, thank you so much for your time today. I appreciate all of your insights.
Looking forward to seeing you at the RMA and crashing into you as well, because we're going to have a nice race.
We are. I will see you on the go-karts. And thank you, everybody, for watching today. We appreciate your time and attention. We'll see you all again soon. Bye.
Have a great day.